All right, in this post, I want to talk about some aspects of the markets that I haven't really touched on in a long time. In fact, I don't think I've actually really talked about this since we've had COVID, and that is the put-call ratio. It generates triggers, signals in the market when things are getting a little bit frothy, a little overbought, and I want to give you an idea of how the market changed, how it was before COVID, how it evolved during COVID, and how the markets are back to normal. They've been back to normal for quite a while in terms of how the markets move. But the put call ratio here is a great way to view that. So if we take a look at this, this goes back to 2015, goes all the way to 2020. We got the COVID pop in options and the put call ratio. All that is normal price action and fairly easy to navigate and to identify triggers, overbought, oversold levels in the market. The key here is the price on average is above this blue line that I have going across the chart around the 0.73 level. Now, what happened after COVID? Obviously, we saw everyone stuck at home. They couldn't bet on sports games. There weren't any sports games, and they were getting free money. And the people started to move into the stock market. And of course, what happened is the people who don't really know what they're doing, you can't just walk into the stock market and expect to make money, although that's almost what everyone does when they get into the stock market. But what happened here is everybody started buying, the stock market started to go up and everybody started buying call options. So buying leverage, these are cheap, volatile contracts that can go up in value, but they can also drop in value. In fact, most options expire worthless. So it just goes to show how dangerous they really are. But the average small trader who doesn't know what they're doing bets on these because they're like a lotto ticket. You get reactions very quickly. And the more calls that are being the more calls that are being bought end up driving this ratio below this blue line, really negating the value of the put call ratio. When it's way out of its norm, it doesn't have the same signals. You can't really use it anymore. So, I mean, during COVID, it was pretty much thrown out the window, never watched it or really traded with it at all. And as we can see here, it ended up being well below that blue line, the complete opposite of how it was before COVID. And then finally, it started to move back up, and now we're back up on average above these ranges. And we come into the current price action where we are right now. And so now, we've been into really 2022. We've been back into normal price action. The markets have been moving very normal in terms of how they swing, pivot highs, pivot lows, trends, and things like that. And so what I'm showing here now are these blue lines are showing kind of trigger points in the put call ratio that tells us when there's usually some type of complacency and the market is going to have some type of pullback, a sell-off or a correction in price. And so if we take a look at this, we can add the NASDAQ chart down below. And when we get these triggers on the put call ratio, you can see the put call ratio works very well during sideways markets and falling markets. And that's why I've got it here. So we've got a signal that happened right over here telling us that the stock market was close to selling off. Everybody was very bullish, and the put call ratio was signaling a pullback, and we saw a 20% decline in the NASDAQ. The next time we had one of these signals was a few months later. It fell 26%. And then we had another one a few more months later. It fell another 21%. And then the last one that we've seen generated about a 5.5% decline in the NASDAQ. Now, what's interesting is we just got another signal right now. And the market here is definitely right up into kind of a resistance area, right coming into this previous consolidation phase. And the put call ratio is telling us we're probably going to see a pullback. The average pullback is pretty significant. The trend when it's going down, typically you're going to have bigger moves to the downside. Right now, the trend is actually trending higher, so pullbacks are muted. They're much smaller than in a downtrend. So I'm expecting we're probably going to see some type of a 5 to 7% correction in the stock market based off the put call ratio, based on the short-term technical charts here on the QQQ. Now, what's interesting is if we go and take a look, let's take a look at the QQQ itself. And let's take a look at it. So here is the COVID crash on the far left. And then going up during a bull market, I like to use cycle analysis, intermarket analysis to identify when the market's oversold, when it's overbought and ready to pull back. It also helps us identify if the trend is up or down. So we can really navigate the markets very cleanly. So in an uptrend, you need a different strategy than a downtrend. And most people don't realize that the game completely changes when the trend changes. But the setups that we've had back over here, there's several of them that happened after COVID. And the average market correction here has been about 5.5% to the downside. And what's interesting is right now, all these setups that happened here where the market's pulled back, we have that same setup right now in the NASDAQ. So we've got two things kind of going here. We have got a bull market top signal happening. Plus, we also have a put-call ratio signal happening. And believe it or not, both of these signals haven't happened before. So it's going to be very interesting to see when we get a pullback and how big that is going to be. There could be a very sharp pullback in this stock market. In fact, if we were to take a look at Friday's price action last Friday, which the date for that was the 9th of June, we saw the stock market, the indexes closed positive, but most of the sectors, almost all of the sectors closed lower for the day, meaning almost all the stocks fell in price, yet the indexes kept going up. And that is because we've got this AI bubble. We've got the semiconductors on fire. Tesla, Apple are on fire. The markets are being juiced to the upside by a couple big heavyweight tech companies, and it's masking everything. The average portfolio is trading sideways or lower. It's had a little bit of a rally this year, but most individual stocks are struggling in a big way. And when those leaders start to sell off, we're going to see a pretty big pullback in this market, and we could see a 5, 10, 20% pullback very easily. If we were to just measure that out to see where we are, we could see a 14, 15% pullback will bring us right back down into this previous support level. We could see down back at the 2022 lows, which is about a 28, 30% correction. And then, of course, we could go into something much bigger, which I'm going to talk about in my next article and touch on those things because really this is just an early warning sign. We're doing very well to the upside. We've got QLD position. It's up 30%. We've got all kinds of other positions that are up. Our SPY position. You got to be long here, but we have been pulling money off the table. We took some profits off today, 15% on a QQQ trade. So we've got a lot of different ways to profit from this rising trend, but you've got to be ready for the market to sell off. So if you want to learn more about this, I'm going to cover some long-term chart analysis in another video here. But more or less, if you want to learn more about this, you can go to my research. I've got lots of articles. I've got podcasts and videos where you can catch up and see what I'm thinking for all kinds of different commodities and indexes. If you want my trading signals, trading or investing signals, you can come over here to the strategies. We've got strategies that are fully automated, which you can just have your investment account managed for you by the broker, or you can actively trade and own some of the hottest sectors during these rallies. And of course, if you're interested in a good read, I've also published 2 books here just in May on 2 very different topics. One of them is called Asset Revesting, which is all about investing in only assets that are rising. We don't hold anything that goes down. This is what all my strategies are based around. You won't catch us with the buy and hold. We don't ride things down. This is why we have our account trading up and to the right. We're hitting all-time highs with our consistent growth strategy almost every couple of months. No matter what, even in 2022, we kept hitting all-time highs while people were losing their shirts. And that is what this strategy is all about. Again, if you're a really active trader and you want to learn a little bit more of the nuts and bolts, you can get Technical Trading Mastery book. And that is going to give you the really foundation of how to become a technical trader and investor with the proper mindset, the basic technicals that you need to know. It's everything you need, the foundation to build on to move forward. And I share 2 of my short-term strategies, a momentum strategy, how to identify overbought, oversold conditions. And then I also touch on my swing trading strategy and how to play longer-term trends in the market going forward. Anyways, hopefully you take care and talk to you soon. Bye-bye.